Hey, hello everybody. Thank you guys for making it out to the second free webinar. We are planning on doing these a whole lot more often. I'm like best case scenario, I'm really hoping to be able to do these like once every 2 weeks. I think it's a great way to, I guess, just kind of keep up with you guys and just see if there's any way I can help, because obviously I know mentorship can be expensive for a lot of people and a lot of people can't genuinely afford it. So I hope this can provide some value. But to get things started, what we're going to do today is we're going to go over, if for the people that have been in the free chat, they know that we've been building a book over the past 6 months. And essentially why I wanted to create a book rather than create like the V3 course is that, one, the V3 course would probably take ages to create. I would also like to probably get the production a little bit better. So I just thought, in terms of time and effort, from a time and effort POV, I just thought making the book would be a lot more straightforward, a lot more ideal. And there's also a lot of people who maybe cannot understand my English, or just don't speak English at all. So who's to say you can't just translate it in your own way? But yeah, let's go ahead and get started. Like I said, we're going to go through the book, and then Alex has a presentation over the Corsica Fund, and then I'm going to go through, or me and him are both going to go through our separate charts, a couple of executions before afters we took over the past couple of weeks, and then from there we could just do a Q&A open format, similar to how we do with all the Zooms you see on YouTube. But yeah, let's go ahead and get started. How can I get this book? Give me a second. So, right, like I said, the Endure Blueprint is essentially everything that I could possibly think of when it comes to trading, when it comes to building systems, to psychology, to all of the concepts that we use, to then trading models and trading plans, kind of just all conjuncted into one. And then after all of the educational stuff, I have a lot of before afters that I took in real time for you guys to just take note of. And then I have like chart work that I included in right after that. So it's it's about 100 pages. I would say there's way more than 100 lessons. Like, I'm not really trying to pitch you guys on this. It's just more so I'm trying to explain what this is. If you guys haven't seen this, just feel free to go to the free Discord. I posted this, I believe, yesterday, and it's kind of just a small, I guess, sneak peek into what we're doing. And the reason why I included a couple of pages from the book itself is because I want you guys to kind of just see the tone of the book, see how I've structured the book, and see if it's something that, could be worth your time. So yeah, you guys can go ahead and read up on this in the free channel. Let me know what you guys think. If there's any mistakes, I mean, I've done my best to, I've had like multiple people review this, so I did my best to try to hold back on all of the mistakes, fix all the mistakes, make it fluid, right, make it flow right. So you guys can just see this in the group chat. And my plan is to release this over the next 2 weeks. I'm kind of getting some stuff done to the RCV site. So as soon as that's done, I just implement this on there and we are good to go. There will be a variety of payment methods. You could pay directly through the website. We can pay through crypto and we can pay through PayPal. And if neither of those work, then just feel free to DM us and we can accommodate for that. And I had this conversation with the Endura group yesterday. I had asked them, be like, hey, what is a reasonable price for what you see here? And I showed them this, and they gave me like a rough estimate. It's like, what is the absolute max that you would pay for something like this? And the vast majority said anywhere from $200 to 250, and then I had a couple of people say anywhere from like 100 to 200. So I just thought, hey, look, the objective here isn't to make a whole lot of money, but I also think that it is fair for me to try to get compensated for, something that took me a very long time. So I said, you know what, let's just charge $100 for this. I think it's a good price point. I think it's very attainable for anybody who genuinely wants to get it. And yeah, nothing else around that. $100. I hope it's not too much for a lot of you, but I did try my best to try to include more than $100 worth of value. So what do you guys think? Do you guys think that's fair? What do you guys think of the book itself? What do you guys think of a book versus a course? Is there any preference with you guys? Personally, I'm a visuals guy, so if I can see the text and images, I learn way better. And I also really like watching videos. So yeah, I just thought this was like a very, very just straight. I'm just trying to be as straightforward as possible here. Very fair. Yep, it's going to be $100. That's it. Like at first, I was thinking like 200-300 bucks, but it's just like, look, that's a bit steep for some people, maybe. But yeah, I just said, you know what, $100, let's do it, let's run it. I hope this can help you guys in many different ways. But I also created a Spanish translation for some people that may be in the Spanish side of the free channel. And the reason why it's an add-on and you can't just buy it separately is because the chart work is in English. So I just thought, hey, if the chart work is in English, I don't have the time to go back and make every single chart again because it's hundreds of charts. So it's just I can't go back and make everything in a Spanish. So you know what? Just get the English and we'll add a small fee for the Spanish fee or for the Spanish translation, and you essentially get a 2-for-1 for only a quarter of the price essentially, or a quarter extra of the price. But yeah, what do you guys think? Cool so far. And I will say that everything is in here. Like when we're going to the table of contents, everything that I could possibly think of is here. I also structured the book in this way for a reason. I think going over psychology is probably the primary thing that I wanted to do at the beginning of the book because of one main thing: resetting expectations. I think this is going to be one of the most important sections of this entire book. If we can reset our expectations, or just not even have expectations that are just, in my opinion, a bit of a stretch, it can really just give you a paradigm shift. It can really help you with acquiring patience, and it really just helps you with seeing the bigger picture. So that starts that. Then I got into risk management, market structure, order flow, which is all of the essential RCV concepts that we've talked about. And I know there's a couple of concepts that we didn't make videos on, so I just hope this kind of fills in the gaps, if that makes sense. Yeah, I hope it has more than $100 of value, man. I really hope so. But yeah, that does it for this. I'm going to pass it over to Alex. He's going to go through the Corsica Fund, and then he can start with his chart work, and then I'll get back to my chart work.
Cool. Just want to say on the book as well, obviously I've gone through it a multitude of times, and it is there is a lot of value in it. It's very dense in that respect. So there's a lot of info in there. And if $75 per month isn't like feasible for you, the book is definitely a good starting point, I think. So nice one. Right. Cool. So I'm just going to go through basically the other projects that myself and Fredo have been working on for a while. And it's, if you don't know already, I'm not part of the RCV company. I run my own, which you can probably tell by my profile picture. It says Corsica Corporation. Basically, in short, we run a social trading fund, which basically, in very simple words, is clients put money in with us, it's traded, and they're paid out on a 3-month, 6-month, or 12-month basis. And I'll just share the screen of the deck now. I'm not going to go through the whole deck because this isn't a sales pitch. It's more just introducing it to you for those that are interested in potentially exploring this option. I'd say this is the closest thing that we have to kind of like earn while you learn type thing. I know it's very cheesy and cliche, but that it's the closest thing that we have. So what I'll do is I'll send this deck into the free chat and you guys can just have a read of it. We've got our offerings over here. If you're interested, just have a look. You can see the different types of returns for the different investment cycles that are offered. And then there's just a bunch of info on everything from the way it's traded, the returns that are given, to the risk management side. You've got the track record as well, which you'll be able to view just by clicking on this link on the PDF, which will be accessible. And then just some reviews, the business roadmap, and then just an enrollment process on basically how to do it. But for those that aren't perhaps like ready to invest or aren't interested in investing, but know someone who is, we do have an affiliate framework. It's here. So the minimum investment for anything will be 10,000, and then anything above 10,000 but below 20 will be 150. So it's about 1.5% to 1%, depending on obviously however they invest. these are they might seem small retrospectively, but you have to remember, we can't just take money out of a client's deposit and give it to the affiliate. This would literally be coming out of our pocket for the referral. So obviously, the more you refer, the more obviously you'll make. It's just there for those that know someone. And yeah, it's pretty much it. But again, I don't want to make this whole kind of, I don't want to take up all your time just explaining every single thing about it. So I'll send it in the group and you guys can just have a read and see if you're interested. So that's that. I'm going to go through charts now. So the past, like, I want to say month, I've
Hold up,
been
hold up.
very
Yo, hold
kind
up,
of,
hold up, hold up. Does anybody have any questions, concerns with that? Anybody have any questions? What do you guys think of that? Like, I will say that the barrier of entry to get into something like this is extremely difficult, and a lot of them are borderline scammy. So I generally wanted to see what you guys think about, the whole Corsica thing, because as you guys know, I don't affiliate with brokers, firms, anything. So this is the first project that I'm willing to put, my name on, and yeah, that's how you guys know I just have faith in this. So I just want to know what you guys think about it. Please save that for the end, please. If you can wait for the Q&A right now, we're just covering the fund. So if you could do that for the Q&A after we go over the charts, that would be perfect. Let's see. Yep, everything is being recorded. No worries, man. But any thoughts on the fund? Yes or no? If not, we can just go ahead and move on.
I think there'll be more questions once it's sent and people can actually read and see. But if anyone has any questions off the bat, then let us know. If not, I'll start in a minute.
Cool. Yeah, I guess you could just go ahead and get
Okay,
started with the chart work.
nice one. All right, sweet. Yeah, so the past month or so, I've been very hands-on with the business side of things. So I haven't really been able to take too many trades in the past. I want to say really through April. So I'm going to go through some of my markups from March, because March was a pretty good trading month in my opinion, alongside February as well. I think Q1 in general was just pretty good. Based on my observations of this previous lot of this month that's just gone, April, it has been relatively slow in comparison to the rest of the year. And I know some of you had the same kind of thoughts and feelings. I remember when you joined the call, you said you've kind of seen the same thing like this week or the week before. So you're not alone. And there's always slow weeks for people like myself, Fredo, or whoever's trading. It's totally normal. So don't ever feel down about it. So this one is from the 4th of March, and this was a long on EU that I was looking to take. And obviously externally here, you can see that price is trading higher. Then we had a push down here and then a move up, right? Now, a lot of the time, what you'll see is in the kind of first hours of London. So you're going from, say, I don't know, 7 to 8 a.m. till 12 to 1, you'll see a relatively strong just continuation throughout that session. And then you can kind of look to anticipate a form of reversal when it comes to New York Open. So the overlap side. It's very common. It doesn't happen all the time, but if you're seeing, it's basically what I'm trying to say is it's very common to see this kind of thing in the kind of early hours of London session before New York opens, and vice versa, obviously with downward, right? Just very continuous order flow. And we were kind of having that characteristic here, as you can see. And I just use that to identify the long. So here it is. So we had the price trading upward, relatively strong order flow here. And then price had hit that SC over here and then had a nice reaction from that. Now, I didn't take this one straight off the bat because this obviously didn't break this high on the left. So it could have been a potential sign of an unwillingness to go higher and then a potential reversal lower. So I didn't end up taking this SC. I wanted a bit more confirmation on that side of things. So I decided to just wait basically for a new POI to form, which is as you can see here, right? And then price came in to that POI, and I put here, if this breaks, move stop to blue, right? And the reason for that is because we would have had low, high, low, and then if this breaks, we get a new high in comparison to this one, right? And the reason that I would have moved it here and not here, or even here, is because what can happen is you have your range. So you've got your low, high, low, high. So you've got your full completed range here. You can have what's known as a CBOS, breaking this low, i.e. this one here, potentially, before going higher again, right? So I'd rather have my stop at a conservative place, and I'm also cutting my risk based on this movement, right? If this high breaks. If this high doesn't break, my stop here still remains intact because I've still got the low here, 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 and here. So I've got my stop sitting below that low currently, right? So it breaks. So stop has been moved to blue, and there's little to no risk. I think it's zero, but it was 0.03% loss if this hit. And it did hit, right? And this isn't like, not all trades are winners, not all trades are losers, but this is just a perfect example of like how you should manage your trade. And, I'm not putting my stop too high. I'm not putting it, say, too low, where I'm actually got more exposure in the trade. That was perfectly managed based on this trading range rule, knowing that if this CBOS occurs and then we have a failed conversion higher, or just don't go higher at all, and then we break this low, that's a reversal BOS, and we can anticipate price to go lower, right? So that was one of the first trades of March. And then, as you can see, the stop did save us from actually losing that full 1% here when we were exposed to 1% originally, right? And I prefer this method rather than just taking partials, because if I'm taking partials after this, I am cutting my risk in half. And yes, like, you're probably leaving with more profit, then you're also sacrificing all this profit up here that you're going to potentially lose out on. So I think I'm very firm on kind of keeping the risk that you take in the trade the same, but you adjust that risk with trailing your stop loss rather than cutting the actual lot size in half or 70% or whatever it is. So that was that, right? Cool. Second trade. So this was actually two trades that were taken. So there was a trade here, and I was actually using this as a case study at the time as well. So there was a trade here with I think it was a 1-6 TP. So this whole kind of like next case study is a lesson on realistic take profit targets, right? Now, when you're trading, say, or executing your trades on the 2-minute, for example, it's very unlikely that you're going to see a 30-minute, 1 hour, 4 hour, whatever it is, target, i.e. here, be achieved, because your trade is being taken based on this time frame. Because I'm taking a buy on this time frame, the 2-minute, because I know the micro direction is bullish, right? That doesn't always mean that this setup here is going to manifest on a long-term scale. So I need to be relatively conservative with my target. So this is an example of a kind of like non-conservative, unrealistic target. And the second target, which is here, which is the less significant major high, is a lot more realistic, right? So this one is 1 to 3.32, and this one is basically 1 to 6. Now, 1 to 6 looks great, but the chances of this hitting and manifesting based on my micro analysis, right, of just external bullish, is a lot more higher than the significant major high hitting based on my micro analysis, right? If I'm going to target a major high that's more significant, i.e. on the 30-minute, H1, H4, whatever it is, then my executions need to be in alignment with the direction of those timeframes. So that's how I see it, right? So as you can see, the POI, I mean, it's relatively straightforward, the POI here. You have prices like this. I mean, I'd say if your stop loss was sitting below this low, then a TP up here would be slightly, I want to say it's slightly more justified because you're giving it a lot more breathing room. And this breaking, say, potentially doing this and breaking this low is, so I'm on the 2 minute now. If I go to the 15 minute, this is just going to look like a standard move like that, right? And then potentially this high here is a lot more reachable because we're giving it a lot more breathing room. But because it's a scalp, I'm just going to target this high. I don't need to target the extra 2% and potentially lose out on the whole thing. So this is what I'd just rather do. And then we have our stop moved based on the same premise in the previous trade. We have low, high, low, high. So we can anticipate something like this to potentially occur before price comes up and hits TP. And my stop is here, because if this breaks, we've had our CBOS, potential reversal BOS, and then it's probably going to go a hell of a lot lower, right? And again, I'm now completely unexposed to any type of risk. The only risk I have right now is time risk, really, which basically translates to I've held this for a certain amount of time. If I leave with nothing, then I've risked X amount of time and that's it. But I'd rather risk the time than the actual monetary side when it suits. So we've got the low, high, low, new high, stop moved, safe. And then price comes up and hits TP1. And then we have the same kind of thing here. If this high breaks, then I move my stop to this low because we've got low, high, higher low, higher high, right? And if this low breaks, we're probably going to see something like this, right? And instead of leaving with 0%, if this does break, it's going to give me whatever this is, 1.5%, I want to say. And as you can see, it broke. And then we have our stop moved to this high. And I also put here, I will hold for 1 more hour if it lasts that long, and then I'll close just because it's coming to the end of London. So I just say, okay, cool. Because ideally, another little tip, which I don't think I've shared with you guys, ideally, if you're targeting liquidity, in this case here, you want that to hit before London ends, especially on pairs like GU and EU, because on the latter kind of timing of the day, so from 5 till market close, which is 10 p.m. in the UK, it's very slow, and you're probably not going to see any grabs unless you have FOMC speeches or meetings at 7 p.m. Then you will. But ideally, I like to be out before 5. I mean, even 4 some days, but I'll just use 5 just to kind of give me that extra breathing room. And we came down before 5 and we took out the stop here, which we had, which was, 1.58% from that. But you can see here, we pushed up to about 27065. So that would, so it would have been about here. But we didn't manage to take that high, unfortunately, and we just fell and hit the trailing stop here, which is still fine, right? But it's just, again, the same, the constant repetition of target. Like, I like to kind of compare it to like fight someone your own size. You know, if you're like in the lightweight class of the timeframes, i.e. the M1, M5, whatever, you're not going to be targeting the heavyweight timeframes, H4, H12, D1, etc. So just be realistic with your targets, basically. And being realistic with your targets, if you're actually hitting your TP, your win rate is obviously going to go a lot higher than if you're targeting silly 1 to 10, 1 to 20s for no reason. Any questions so far before I move on? No questions? Okay, cool. All right, cool. No questions. So I will move on. All right, so this was a bit of a messy one. And again, this is quite risky because I'm going against no, I'm not going through AUD I don't trade that. But Fredo, I'm sure has some trades from AU. I'm not sure though. I don't trade that, so I won't go for it. So very simply, like externally, this is bearish on the M1, and this is again kind of like it's going against that rule. So it's always important to be aware of that. And then we had a basically kind of like a crazy price movement here coming into the 130 region. And a little tip, 130, you're more than likely always going to get like a spike in volatility. Reason being is because a lot of American fundamental releases come out at around 1:30 p.m. Like UK time. So in New York, that's 5 hours before that, which is 8:30 off the top of my head. And so yeah, just that's one thing to keep in mind, right? So I saw we had price push up above this high over here, and then we pushed below this low, and then we broke this high here, right? Then we left this SC, and because of it being so high risk, instead of placing my stop below this low here, this SC, I wanted to place it below this low. And that's again, same thing based on low, high, low, high. This is our full kind of completed trading range. So I'd rather have my stop in a conservative space here because I am trading against the overall trend and my TP being this high over here. Right. So the reason I'm going against the trend is because of this mini structural disruption here, but it's very choppy and I wouldn't recommend, as a kind of beginners learning this style, just stick with the actual trend unless you see obviously something different. As long as you acknowledge the risk though, this is something Fredo says quite a lot, which I do like. As long as you acknowledge the risk and you're happy to take it on, psychologically sure that you want to take it on, then go for it. But bear in mind, you're more than likely going to lose if you are going against the standard. Right. And again here, I need orange to break in order to move the stop, right? Or I need the orange actual price action to move the stop. And as you can see, I moved my stop there. Oh yeah, this is the annoying thing, right? So all right, so based on orange here, right, and I'm gonna draw this out as well. So I want a little bit of text interaction, right? I've got low, high, low, high, low, high. Oh no, it's not high yet, sorry. How do I get rid of that? Right, and then high. My stop is currently here. I mean, I kind of gave it away, but should I move my stop to number 1 or to number 2? Based on the trading range thing that I was telling you about. This low or this low? 1 or 2? If the orange high is formed, if we break orange. Cool. So we're seeing 1, 2, 1, 2. So there's a mixture of 1s and 2s here. Any more? For those that aren't asleep. Right. So majority said 2. Now, I don't know if you're going off of that because I moved it here, but let's look at the trading ranges again. We've got low, high, low, high, low, then high, right? So based on the A, B, C, D, or 1, 2, 3, 4, I should have moved it here, right? 1, 2, 3, 4. It should have been moved there. I guess it's a bit confusing because I did the orange like making a new high, then a new low, then a new high. But we just had a new high like this. We didn't actually have that. So the answer is 1. I should have had it here. Instead, I put it here, and this was a mistake that I made. And it hit that, and then it ran, right? And the stop should have been there, right? This is the same. This is the 16, I want to say 27161, 162, which is this low here. Oh, sorry. There, right? And notice it took me out at stop loss number 2, which what everyone in here was saying, apart from Reese and Christian. So well done, you two. It took me out at number 2 instead, and then ran. So I should have had it at 1, right? Based on that trading range framework. And that's exactly how I had my stop originally, right? I had it. Where's the start trade? 1, 2, 3, 4. Right? That's where it originally was. Then a new high was made. So we've got 1, 2, 3, 4. And then my stop should have been here instead of here, basically. Pretty much, yeah. I mean, it's just, again, what I was saying, you can have a CVOS of this high, sorry, this low, and then it can run. But usually if you're going to get a break of this low and this low, you're more than likely going to see a reversal. More than likely. Not always, but the odds are in that favor. But yeah, good little exercise. Well done for those who contributed. Since it was so close to TP, would you have put it at micro lows to mitigate for potential losing time? Are you talking about this trade? Right here. Would I put it, say, at some of these? So in some cases, I would, but that's if I mean, this isn't close enough to me. If it was trading here, and Fredo has an example, which I'm pretty sure he's going to go through, which was the other day, and there are some cases where, you know, you would move your stop to these lows, or if it's on the flip side, the highs, but there would need something. There would need to be something to occur. So a new invalidation, a new micro invalidation would need to form, basically, or a structural disruption would need to form, and then you move your stop. So you know, if that occurs, then you are going to lose. So you move your stop in that case. But based on just general structural rules here, it should have been here, and there was no real need to move it until this broke. But this just fell, took me out at my wrong stop loss, and then ran, as you can see in here, right? So it made the high, came down, took me out, and then it ran. I mean, it was just very, very choppy here. So, but yeah, notice how the right stop loss, i.e. number 1, didn't get stopped. It's just very an annoying situation, to be honest. But it happens. All right, cool. Final one. So this is basically kind of 2 trades in. Oh no, my bad. I'm not going to go through this. There's not much. I mean, this was just a very simple textbook setup, right? We had trading down, transition here, right? Low, high, low. SC pending OFD because we price traded up, reacted from that SC, failed to convert lower, and then broke the high. So we've got unwillingness here, and then we broke the POI after it had a reaction, as you can see there. So that's OFD. We've got OFD, unwillingness, mitigation of a bigger term POI, and then price just came into that SC and ran. But it wasn't too detailed, so that's why I didn't go through it. But that's the basic premise of that trade. Cool. So we've got the final trade / trades. There was 2 trades within this. So there was a sell and then a buy, which I'll talk about in a minute. So very simply, we had price was bullish, or it technically is bullish, and there was a sell opportunity that I saw kind of coming into this New York, right? And the reason being, again, we had the continuation all through the first 4 to 5 hours of London. And then, as you can see, as soon as it strikes 12, we start reversing, right? And we see a CBOS, potential RBOS, failure to continue higher, move lower. And then we see a potential CBOS here, and then a reaction, right? And also order flow disruption. So it's the same thing that we spoke about in the previous quick trade. So we had a reaction off of this POI. So you can see here, took this high and then broke it, right? With no effort, like 2 candles and it was done. So that said to me, okay, I can sell there because technically it makes sense, right? From the session framework to the order flow disruption and the momentum, it makes sense to take a sell here, right? But notice how my target is calculated. So I'm not trying to target the bloody weekly low because of some miniature transition on the M1, right? That would be insane, personally, in my opinion. I mean, you'd be very, very lucky for that to occur. So all I'm doing is targeting this low. I mean, an even smarter option would have probably been to target this POI here, because I have to assume that the external is going to continue higher, right? I have to assume that. But because of this, I see a micro opportunity to capitalize on a very small term sell here. Hence why it's only this. I mean, I think this is probably the only trade this year I've taken that was below 1 to 2, but it just seemed too good not to take. So that's why I did it. But again, like I said, I'm not trying to get that high number. As long as it's positive and it's a winner, I'm fine. Stop is above this high because it took this high and then it broke this low, and we had order flow disruption, which was initiated by this high. Post mitigation of this as well. So there's just too many confluences not to take it, basically, right? And then this would be a situation where I would defy the 80-20 continuation to reversal trade ratio. And this is what we had, right? We had price, trade up, we tap the high, but this is why you always need to have your spread added, because if you're placing it directly on the price at 420, 09420 on your broker, you're more than likely going to get stopped out via spread. So you always have to add spread +1, +2, and you won't get stopped, right? So it came up, we didn't take the high, so it's technically still a range. We just mitigated 100% of it rather than 60, 70, 80, 90. And then we reacted and came down and hit TP. Pretty straightforward, I think. There was a lot of confluences and that made sense. Yes, it is. Well, yeah, it is LGC as well, but it's OFD as well. So you've got the grab of these highs and you've got the break of structure, and you're technically continuing this downward move. So yes, that would be
No,
an
no,
LGC.
no. Hold on.
Well,
No. That's not LGC. You're bullish.
Yeah, but it would be in
So
the internal continuation.
It would be classified as structural disruption. Because realistically,
right.
if we're bullish, we're looking at this to be solidified, so we're aiming for here. But because of the order flow disruption and the internal SD, yep. So Alexander has that right. Yeah, it would be considered SD because we are externally bullish.
I see.
Yeah.
Right. Cool. So that was the TP on that, and then again, as I mentioned before, see, this is just an adjusted TP down to here. This isn't where I was targeting. This was the target here, 177. So we had our correction in the overall external, and we had price come down, take this low, and then break this high. And usually I like to see movement like this after a break and not something too aggressive, because then that could potentially be an indication, not always, but could potentially be an indication of a continuation down. But we had the break, bit of stagnation here, and then just a slower move into this POI. And now I'm following the external trend, and I'm happy like with that. And my target is this SC here. Usually when I will see a POI of this sort here, I will just target that rather than the high, because I might be missing out on like I say, an extra 0.5%. But again, I'd rather be out of the trade, win that 3% or whatever it is, and be done with it, right? So that was that. And then basically we came very close to stop. I wasn't at the chart at the time, and then it came down and then came up. So I just decided to move my stop here. Probably wasn't the best move, to be honest. I think here would have been a better option. But even saying that, we didn't even break the high. So technically, if this broke, it probably would have been a bit sacrificial. But I just decided to come out the trade here anyway, right? Because we came close to TP once, twice. I just rather have been out at that point. So this move here was kind of like maybe like a more of an emotional move than anything, than a logical one. But I came out here and it did end up coming up, and it did actually mitigate the SC, and it did react. It didn't break the high. So I was quite fortunate with that. But either way, it would have hit TP. So yeah, that's my collection of trades. Sorry, I don't have anything kind of too more recent. I just haven't been too trading focused in the past kind of few weeks. It's been a very busy period. Like first month is usually very busy of the quarter. So, but yeah, that's it. Thank you for tuning in, guys. I'll pass you over to Fredo now.
All right, cool. Any questions on Alex's section, or should I just go ahead and get started? Wasn't the SL aggressive at the entry? No. I will tell you
Send,
my criteria for that.
should I just show? Can I
Yeah,
just
yeah,
quickly
yeah.
show him
Send
why
me
I
send me the
picked
chart.
that?
Send me the chart. Put it in the chat.
For 2 seconds. Well, I can't do the drawing. Let me just screen.
No,
I know I can't. But can I?
just send me the chart, bro.
All right, cool.
Cool. So
So he's referring.
my criteria. So my specific criteria for moving invalidation is usually CBOS continuation, not just creation of a new high. But in terms of why this original SL is the invalidation, I think it is still valid. The only reason why I say that is because every single time, and I have this specified in the book as well, invalidation points are almost always going to be a solidified point. And if you don't understand what a solidified point is, that's why you are, that's why you can look into the YouTube video that I made for that. But if we're looking here, any break of a wick is technically an internal break of structure. So as soon as that then creates a new high, that means that this low has been solidified after the break of that high, and then that's why we start the upward movement here. But because it is a solidified low based on the internal breaks, then that is a valid invalidation point. Aggressive, conservative, that's then open to interpretation. Does that make sense? We'll take all questions after I finish my segment. Okay, perfect. Invalidation solidified points, keeping in mind the trend. Yeah. Yep. Yeah, but it's just like it doesn't like don't reference this at all. This doesn't matter. This here, Doesn't matter. This goes across the board, any time frame. Also, another section in the book is talking about the types of traders, where whether you're a scalper, an intraday trader, a swing trader, a position trader, it doesn't matter. Everything is relatively the same, right? Because if I'm a scalper, being real, the swing doesn't really matter. The position doesn't really matter outside of analyzing potential targets, because obviously if the security is higher, the higher in structural level you go. So let's say we meet a swing target on a daily time frame, then yes, of course that is relevant. But in terms of using the swing to get my bias for a scalp, it's not necessarily always going to be valuable in terms of, or if you're to compare it to, let's say, a minor intraday. So let's say I'm a position trader, then I should really only be focused on the major intraday, the swing, and the position time frames. If I'm a swing trader, I should really only be focused on the swing time frames, the major intraday, position maybe. But for example, me as a scalper, I really should only care about the minor intraday, the scalp, and the micro. You know, so just a matter of training wise, any specific time frame wise, but I was just being able to see what might be going on within the tiny moment. Yep. You do eventually train the eyes though. Eventually, you just start seeing any little break as something of relevance, maybe not significance, but just of relevance. So as long as you can note that, then you should be fine. But yeah, let's go ahead and get started. Cool. So trade number one. I will try not to rant too much, just so you guys have time to give us questions. So I'm just going to give a quick rundown. I have about 4 executions, and yeah. So execution one, relatively similar to Alex's structural disruption video, or I mean the order flow disruption trade that he showed, that we also deemed to be a type of SD as well. So I know that my direction is technically bullish, right? And if you're wondering, I'm always trying to use the DLE framework that I mentioned before, right? Direction, liquidity, execution. What is my direction? What is my liquidity doing? And then where is my execution? That is the 3-step framework that I typically use for every single execution. That doesn't necessarily mean that the direction always has to be aligned with how the liquidity is set up to then be aligned with the execution. I just want to go through those 3 steps to build a type of case, a type of frame, and potentially a bias, right, that I can then execute on. So my direction is technically bullish from an external POV. Just don't even need to mark that. It's just clear as day. We're going from down to up, therefore we are going up, right? And whenever I am analyzing structural disruption, it's all about the solidified points. Everything, in my opinion, about the RCV style, everything in terms of everything is solidified points. If you can understand solidified points, you can then understand structural ranges. And if you can understand structural ranges, then you can then start to analyze the models, therefore being order flow disruption, structural disruption, and LG continuation, right? But the foundation for everything, in my opinion, is solidified points. If you can understand them, if you can note them, and if you can interpret what happens if X and X and X happens. So my direction is technically up, right? But whenever I'm looking at a continuation of a trend, right, I'm always looking for within this region for the typical continuation, right? This is typically what we look for in terms of a continuation, but I will not take this type of scenario. I will not take this type of scenario where we just have a immediate break of structure and then we just take a POI. That's just a traditional, I guess, smart money concepts type of move. I usually don't take those. I like to either take one of my 3 models, and the only reason why is because they are, in and of itself, each one of those are transitions, and they're all either a failed continuation or a proven continuation, which is a failed reversal. So something has to fail in order for me to genuinely take an execution. Whereas here in this execution, right, the direction is technically up. What is my liquidity saying? Well, obviously there's liquidity under every low and every high present. But if I'm to understand, right, a initial structural disruption here, because obviously here we have a internal trend, low into the high. Why this low? Because that's the final time we broke structure in order to then create the massive move to the upside. And why this high? Because we broke this wick low after we made this high, so we have a solidified structural range here. And as I'm going to, or as I'm following the structure here, right, notice that we have a potential sign of unwillingness and then a break of structure. So once the unwillingness is then broken, that is also SD, right? Because we are bullish and we have a failed bullish continuation. So it's fair to argue, right, that after this move, we can solidify this high, but we have not solidified a low just yet, right? Because obviously no high has been taken until here, right? So this is now my solidified low. And even if you want to consider this a type of SD, it could also be considered a type of LGC because we have a potential SD and then we have the LG that favors that narrative. So that justifies to me that we are technically bullish as of now. I mean, bearish, sorry, as of now. But because we had the failed attempt higher here, right, and we broke through a solidified low, plus we have order flow kind of in our favor as well, I said, you know what, I think this is worth my execution. So I'm taking my trade based on a inefficiency fill, and I'm having my invalidation as my SL as always. That's probably one of the things that I always like to do is my invalidation has to be an SL, because I just would hate to see this break through, let's say, the POI, because three things can happen at a POI: the open 50% or the LG of the move. And I would hate to see that just break through. What if I had my SL here and then it just goes? So I just want to avoid that. I want to win the trade and I want to get into the trade. So based on that information, this went on to almost give me my TP. And I'm going to touch up on the management here. So when I'm moving my SL, like I said, I'm looking for CBOS continuation. If I see a CBOS continuation, then I can move my SL. So I did experience a bit of drawdown, but there is a CBOS present here. So once the CBOS then creates a new low, cool, invalidation 1, right? And then I see an internal LGC because I see the creation or a CBOS followed by a new CBOS that is an LGC. So because we had a CBOS continuation, then I can move my SL again, right? And then once again, here we see that we create a new high into a new low, but we see a CBOS and we see the reaction of a POI, which is, I consider that to be just an order flow continuation. It's not a model that I use. It's one that I used to use, not one that I use anymore, just because it had the lowest hit rate. But once we see this mitigation after the CBOS, then create a new low, cool, new invalidation here, right? And it just keeps going like that until I get to relatively 80 to 90% of my position or of my TP. So up until here, my invalidation is here. I do like to trail it as I'm getting closer to my TP, because let's say this doesn't hit my my TP, which it did not, and I missed it by literally 1 or 2 pipettes. Then if I was to then have this break, then I now have a bullish LG present, right? So if I have a bullish LG that's present, then it's kind of my reasoning to exit the trade. But I can also take it a next step further and just keep going based on immediate solidified points. And as you can see, there is a minor break of structure here. So I move my invalidation into this line, because I know that if we break through this line after we break this continuation move to the downside, then that is an internal structural disruption. So because that then hit there, that ended up being an internal SD. So that is my reason to exit. And I am more than happy to exit relatively around 80 to 90% of my position, rather than risking potentially reaching back into a POI or it just really just transitioning. Because at the end of the day, the SD model is inherently a reversal. So because it's inherently a reversal, let's not forget that the external is still technically bullish, right? So that goes for that. And if you actually go to that chart, that actually ended up completely reversing here, right? From here, it ended up completely reversing. So you see, I would have not only taken a loss eventually, or not a loss, but I would have had my trail stop be hit, but I would have also lost the time. I would have also missed a perfectly good opportunity to capitalize, because rather than getting a 2.8 R, then I get a 2.3 R, which is more than enough for the session. And a win is a win, especially if it's justified based on the rule sets that I like to follow. So I just thought that was a great representation of how you should use your SL. So I usually go based on CBOS continuation up until I get very close to the TP. Then I just trail by immediate solidified points. Does that make sense? Yes or no? Awesome. Awesome. Yep. Yeah, it's just it's happened way too many times where it almost hits TP and then it doesn't, and it's just, you know what, I'm just not gonna risk that. I'm just not gonna risk that. Right, second trade, Euro USD. This was earlier in March, about a month ago. Um, Once again, essentially the same model here. It is a structural disruption because technically we are bullish, but I am being conscious that we're reacting from a higher time frame POI. This was a major intraday POI, I believe. And because we are reacting from there, I know that because we have broken through the final leg that created that high, because you can see that this is the last time we see any type of wick break. No low has been broken since then. So my last range into that POI hasn't been broken. So that confirms not only the reaction from the POI, but it confirms an internal LG. However, the direction still is technically bullish based on the structural range leg here. So the only way that I'm going to take a trade is one, if we have an LG continuation, two, if we have a structural disruption, right? Or three, it's if we have a transition that doesn't meet a specified POI, and then I could take like an LGC pattern after that. But those are pretty much the only ways I would enter a trade, right? And if I was to take a LG continuation, cool, then I would need to see this low break, and then I would need to see this high break, because then that justifies to me that we can continue higher, right? But that isn't what happened, right? We are technically bullish, right? We solidified a low based on a sell to buy region. This is a sell to buy region. So based on the sell to buy region, we have a confirmed reaction. So that solidifies this as the pullback low of, in my opinion, the low into high into retracement. So as soon as that is then broken through, then it gives me, right, a clue that we would potentially go lower. And that is what we call structural disruption, right? So now my position is solely based on the buy to sell that occurred there. And my position is entered here, and my invalidation is here. Why? Because then if this low is to break this high, then I can then justify a bullish scenario. So based on this trade, right, went directly into take profit. And the reason why I took my take profit at my, or at the quote unquote extreme POI is because at the end of the day, this is still bullish, right? And like I said, the SD model is inherently still a reversal. So if it is still a reversal, I want to be very, very cautious with how I, one, place my SL, and two, place my TP, right? And this actually ended up going completely lower. But either way, a win's a win. And I love to see when a move just goes from your entry directly into your target, because that to me shows that everything was perfect. The model was perfect, the timing was perfect, and the execution was perfect. So execution, timing, and that's just what creates this high momentum shown here. So I thought this was a very good trade. Let's see, on to the next. Any questions with that? Any questions with this last one? Nope. Cool. Go ahead and move on to the next one. This is another model that I'm kind of trying to work on. It's just essentially I call it the sweep model. Sure, quick question about that. Where? Oh, you're talking about here. Sorry. Here. Yeah, no, that's 100% valid as well. The thing is that, let me ask you something. What would where would your entry price be for this type of for that type of scenario based on this low and this structural disruption present? Where would you consider your entry price to be? Because I agree. I just want to see if you can tell me where the realistic entry would have been. should be able to annotate if you wish to. Yeah, see right at the high before you enter. Just go ahead and annotate, bro. That doesn't help. Yep, perfect. Perfect. It would be based on inefficiency with invalidation at the high. And then TP would either be the same, or if you're a bit more ambitious, you could aim for the low, and then that would have resulted in about a 1 to 4, 1 to 5. So yeah, I have no issues with that execution. I will say though, I think that execution, yep. I get on my desk at about 7. So that happened literally right when I first got on the chart, so wasn't ready for that. But yeah, go ahead and move on to the next one. There's 2 more left. So a fourth model that I'm actually trying to build 2 models. I'll just go ahead and tell you guys this. Excuse me. The first one is a type of sweep model where it's essentially a type of LG, but I'm sweeping some type of low and I'm then causing a transition. So for example, in this example here, we are taking liquidity here. That liquidity has been swept, and then there is an internal transition right after that. Right? The internal transition would mean that the internal trend here reacts and fails. So because it reacts and fails, plus liquidity has been taken, right? Then it gives me the inclination that we will probably pursue the opposite side of liquidity, which is then here based on relative equal highs. So I acknowledge that the internal micro trend gave me a reaction. You could argue that this is the POI that it was going through based on the wick. Then it breaks through not only the POI, but the internal trend. So that gives me a potential sweep model. So the sweep model would then be going from my entry being the inefficiency fill, and my SL is always a solidified point. I could have been a bit more ambitious with or a bit more conservative with the SL. I could have put my SL here, and I think it's then relatively reasonable that if I was to put my SL here, I can then consider this an intraday trade, and I could then pursue essentially the next high. It's like an external SD. I wouldn't say it's an SD. I would say it's more. Well, yeah, I guess you could say it's a type of SD plus liquidity sweep, which would consequently create a liquidity grab. Yep. If it didn't have this liquidity being swept, then it's not as valid in my opinion. But this could be essentially trying to combine different things into one and making it higher confluence. So from here, right, went straight into TP. So we take one side of liquidity, and also let's not forget to mention that because we take out the micro trend, confirm the LG, this is now unwillingness based on this low. So we have a high, low, retracement, unwillingness, right? So we can pursue the next side of liquidity. So yeah, I would say it's more so a structure thing, but you're adding liquidity and potentially a failed transition. But yeah, that's one of the models I'm working on. And then another one is all these entries are supporting trend. Well, no. I said an SD is essentially a reversal. But because I'm a scalper, not necessarily like I said with major intraday and swing, if my major intraday and swing are bearish, that doesn't necessarily mean that I have to scalp bearish. I just have to go based on the transition that's given and if a model is shown. But yeah, any questions on this one? Go ahead and move on to the last one. Cool. So this last one is an LG continuation, right? I know that my direction is technically bearish here. And I also know that we failed to break a high and that is then solidified. So because that is the case, I'm technically aiming for the previous or the external low. So if I'm aiming for that, then I need obviously a transition. So I note that we have a sell to buy move. That sell to buy move has then created a couple of reactions, but I do see this as weak order flow because look, we have 1, 2, 3, 4, 5, 6, 7 taps in the same POI, and we're failing to break these highs, right? So because we're failing to break these highs, then I'm kind of inclined that there's too much effort being shown here, and it's not giving us the move that the POI is originally meant for, which is to give you a bullish transition, a bullish expansion into the upside. So because that is the case, right, I'm always waiting for any type of liquidity to be taken or any type of model to be shown, right? So because we are bearish here, right, and then I note that we take liquidity from here and then create an LG. So the LG is now an LGC model, and because the LGC model is in favor with the trend, I'm not aiming for here, I'm aiming for the external low because of the original unwillingness. So I'm taking an internal LGC into the external minor intraday low, right? And then from here, straight in the TP. Like literally right when I took the screenshot here. Cool. So does that make sense? Yeah, very clean, very clean. But yeah, that kind of concludes my chart work for today, and that concludes Alex's as well. So for the rest of the call, if you guys want to, if you guys have some charts you guys want to show, we can go ahead and review that, and then we'll go as long as you guys want. So there is 20 people on here, so I expect some people to have some type of chart work that we can review. And I think some people have some extra questions. Just go ahead and throw those questions now. Solidified low to break. If I wait for the low to break, there is a thing as too conservative. If I wait for the low to break, I will never catch the move. This is a solidified point here. Solidified low, sweep the high, take out solidified low. Yeah, man. Requires practice, patience, a lot of practice. Hold on. Questions are coming in. Your entry is a combination of two bullish candle before price coming down. Are we using the two candles or the upper one? Yeah, I used the, based on this time frame, I did use this because this candle alone took out the liquidity. But if I wanted to be conservative, 100% can use that. And there's even an internal transition here if you can see it. So yeah, if we're talking extremely conservative, then yes, you would want to take that. If it, in terms of like a textbook play, I want you guys to take this because at the end of the day, there will be times where, let's say there's another POI here and you will wait for this extreme POI because you want to get the highest possible risk to reward and you can miss the trade. So it's just like, look, do you want to get the best possible risk to reward, but only either miss a lot of trades or lose a lot of trades? Or do you just want to make sure you're in the trade? And as long as you get your invalidation and direction correct, then more than likely you will win the trade. So I just think that's a better balance of it. In terms of the premium membership, what does it consist of? Are there one-on-one teaching sessions? Yes, but I don't do that for free. I don't do that for free. The group essentially, I don't know if, have you read through our Instagram and our website?
I only read through the description in the Discord.
Okay, cool. And what do you think about it?
I think it's cool. I mean, for me, I think the one thing I'd be looking for is just, I mean, community, obviously the community, and just like, just a chance to get like, good critique on just thought process of looking at the market.
Mm-hmm.
I'd,
Mm-hmm.
I'd most likely be transitioning from like a different style of trading. I mean,
What kind of
it
style?
seems It seems very similar actually. I've been like trading like with like the ICT concepts and stuff like
Okay.
that, but it seems very similar. So I would really need help just like weeding out what not to focus on anymore, if that makes sense.
Yes,
You know?
yes, I agree. I agree. So if you just want like a quick rundown, what I do with the group is one, you get access to both the Visionary Vault and the Endura Premium Discord channel. So the Discord channel is it's relatively similar to the free Discord, but it's a whole lot less people. We have like around less than 150 people in it. And most of these guys have been in the group for probably 3 to 4 years, you know. So I would say that if you're a beginner, it may not be the best place, because if you ask rookie beginner questions, almost nobody will respond to you except for me or Alex. And if you are to ask those types of questions, it just shows me that you aren't following the process that we have in place. So as soon as you join, we have a 8 week kind of just starter roadmap that you have to go through, and it's very simple, but it kind of just instills good habits from the beginning, and it helps you see the culture of the room and see how you can then bring something to the table without coming off as like a beginner, because there's people that have been in the group, like I said, for years, and they don't necessarily want to be dealing with the beginner stuff. That's also why I try to keep it relatively low key. But that's for that. The Visionary Vault has all of the recordings that we do. So we do Zooms every Friday. And within those Zooms, it's relatively similar to the Zooms that we do that are posted on the YouTube channel. And it's just very straightforward with that. And after a certain amount of time, you are allowed to send me your journals. I have like criteria, examples, etc., and those are complimentary. Those come free with the subscription. So I just go in, do your reviews of your journal, and I send them to you every Friday and Saturday.
Okay. When you say beginner, you mean like beginner to the
Beginner to
community or
trading. Beginner to trading.
beginner to trading?
Mhm.
Okay. No, I definitely wouldn't. I definitely wouldn't consider myself a beginner to trading.
Yeah, yeah. Honestly, it's just like, if I'm being honest, it's more than likely not worth our time to focus on beginner traders, because for one, they probably don't know much, and two, they don't even know if this is something they want to do. So even if we make a little bit of money from it, it's just like it's not worth the time, because especially if we're trying to build the fund in the long run now, like we're looking at the 5-10 year picture, we're not looking at the 5-10 month picture. So I'd rather just focus on people who already know that this is something they want to do, and they want to join somewhere where there are people like them. And yeah, I just think that's the better way of going about it. It may have less people, but it has more quality people.
Okay. All right.
Cool. Perfect. Hope that answers your question. Other than that, you have direct access to me. If you have questions, I do have criteria on how and when, but I answer all of my DMs within 48 hours.
Okay. Thank you.
Cool. But yeah, let's see. Yeah, but thanks. If I join Endura, will the book be available in there? No. The book is extra for everyone. Book is extra for everyone. Can predict POIs, focus on price. Yeah, that is true. I'm a new member of the premium membership, like 2 weeks. I can't. You can ask something, yes, but remember what we talked about on the Zoom yesterday, Amani. Remember what we talked about yesterday. When will the
Yeah,
book
I
be
remember,
released?
bro. I remember that. But my question is, I just wanted to ask you to confirm something. Like, I'm not a new trader, but I've been using like RCV material that you have been uploaded on the YouTube for quite some times, and it has been helping me a lot. I make some few bucks, but yeah. So my question is, can I like be able to subscribe to those? I saw it on the and I mean RCV terms, like I can ask for or I can request for one-on-one class with the teachers.
Yes.
If it is
Yeah.
require payment,
Yeah, it's just that you have to go through the whole process that we have. So I don't want to, like, I don't want you to come in and then you want to book a one-on-one. No, you have to come in, you have to become independent, you have to follow all the rules, you have to follow all the criteria, and then once you're included into the group, okay, now I think you're ready to potentially book a one-on-one, because you've already gone through, let's say, 6 to 8 weeks of work. So most of the beginner questions, you're going to answer them as you go. So any questions that you don't answer after that, okay, now let's see how we can refine. That's why I do journal reviews after that time as well, because I want you to fix your initial mistakes. But then if there's any holes after that, then that's where we come in.
All right, I get it. Thank you.
When will the book be released? I'm hoping for the next, no longer than 2 weeks, bro. No longer than 2 weeks. I'm just kind of waiting on my developers to reach out and finish the work for the website, and then it should be good to go. And I will say too, I do have like just as we have security measures for the videos, like for example with the videos we have dynamic watermarks, IP, email, name, etc. I will have security measures for the book as well. They won't be as you won't be able to see it, but if a book is shared, just know that I'll know exactly whose copy it is. So and then just like that, blocked. And if it gets pretty bad, then we'll see what happens. 2 weeks on EU yesterday. Why do you think price went for the zone marked 1 instead of 2 within the yellow range POI? Why do you think? Here's something that I also don't like to see with the concepts. You don't want to be completely perfect, right? You don't want to be perfect because based on this time frame, the M15, the only zone of interest, right, is I'm noting that liquidity has been swept. I see a buy to sell zone. So based on this individual scenario, liquidity has been swept. I'm using the entire buy to sell because this will give you a delivery into the previous low, and that's a 1 to what? 1 to 2.5 maybe. Like to add then this layer of detail, that means now that you're wanting to be an intraday trader, but you're wanting to add scalp mechanics to it, and that gives you more room for error. Right. However, if you want to get 1 to 30s, 1 to 40s, 1 to 20s, blah, 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 etc., that is how you do it. But it's just not ideal if we're talking longevity. Like at the end of the day, you just want to win a trade. That's the number one priority. You want to be able to win a trade, right? Because if you don't know how to win a trade, you can't win more than you lose. So the foundation for everything is winning a trade. Does that make sense? Hope the book is not limited. No. Limited in terms of what? Journal reviews. It's free for the members in the private group after X amount of time. But yeah, I do show some of the sneak peeks to the journal reviews on the Instagram. If you just go through the reels, you'll find quite a bit of examples of relatively the type of stuff that I do. But yeah, actually, do you guys, for example, for the people who aren't in the group, would you guys think it's reasonable to pay for journal reviews? Like for example, just as we charge for one-on-one meetings, you could, if you're not in the group, I could charge for journal reviews too, and that could be something, you know, that could benefit people as well who don't want to be a part of the group, because that could be something that's relatively cheap. Is that something reasonable, or do you guys think I should just reserve it for the premium group? I could add that to the once we launch the book, I can add that as well. Cool. But do we have any more questions, concerns, any more charts you guys want to go through, or should we go ahead and wrap this up now? Will Enduro be closing new entrants anytime soon like RSV did? For sure not between now and the end of the year. But like I said, like the mission longer term is to build the fund. So if that is to start, you know, scaling as we are planning for it to, then there really won't be any room. And what I would probably do is just kind of shut it down and just make it free for whoever's in. And if you're in, good. If not, too bad, you know. So not in between now and next year, but after the end of this year, you never know. I'm kind of taking this on a whole year-to-year basis. Kind of want to see how we did over the year and if it's still worth continuing, and if not, then we can adjust to where it doesn't take up too much of our time, but I'm also not, making money from the people anymore. Can we buy the book? Yes, in about less than 2 weeks. Was overtrading an issue for you? Maybe like 3 years ago. Getting over indisciplines, bro. I mean, there is no secret. There, like, let me just be real. There is no secret. Whatever your issue is, if we're talking like a psychological issue, fundamentally, the issue is always going to be you. Doesn't matter what it is, whether it's over trading, over leveraging. Because, for example, you gotta look at this also from what can I control, what can I not control. I cannot control the result of my trade, but I can control the timing. I can control if I am to buy or sell and when, right? Well, that goes with the timing, right? But for example, if I'm over trading, that means I'm clicking the button too much. Then that just means you can't control yourself. So there is no secret. Just control yourself. There is no secret. Just, you know what I mean? And if you're over leveraging, I think that's even worse, because like if you can't, like, it's such a controllable thing, right? It's one of the only things that you have direct control over is your risk management. Like, unless you get like some big volatility spike or your broker screws you, right? Those are issues that are not in your control, right? But in terms of executing on average at a 1%, 2% risk perimeter, that is 100% under your control. You know what I mean? So you just have to look in the mirror, man. Will the book be paid for private members too? Yeah, it's not free. It's not free. No, there won't be. That's why I made it relatively cheap. Yeah, 100%. Just had some tips. That's all. I'm at a weird place now. Yeah, man. Like, look, man, let me tell you, nobody's gonna come save you. People aren't just gonna come pop out of nowhere help you for free. It's not gonna happen, man. You gotta fix it yourself. You gotta find a solution. You gotta make it fucking work. You're at a place where you are profitable but still have indisciplines, then that means that there's room to grow, bro. That's good. You want to have room to grow. Bro, can you analyze gold on Thursday? No. You can send me a chart and we can review it. I won't go in there and do that. You guys know I don't do that. But if you want to send me your analysis, we can go through it. I can give you my thoughts. Only two things can happen: win or loss. Yep. Bottom line. Even if you see what you want to see, you can still lose. So keep going. Yeah, it's a game of probabilities, guys. It's just, you never know if you're going to go to a win or a loss just because of random distribution. But you can continue to learn. You can continue to strive for whatever goal it is that you have, whether it's short, medium, long term. Yes, 100% trying each week. Yep, that's all we can do, man. Show up. That's all we can do. Show up, give our best. Is there a one-time pay for the case? I don't know what you mean. Is there a one-time pay? No, there's no one-time pay. I will say though, if you would like to pay for the subscription for the rest of the year, there's always room for negotiation. So if you're in the group and that's something you want to do, then just send me a DM and we can figure it out. But in terms of one-time payment for the class, no, I'm not doing that anymore. Cool. Any more questions, guys? Concerns? Charts? Been an hour and a half. Not bad. Not trading million, but how far do you think you want to take this? RCV changed many people's life into a pleasant to a free. So how far do you see this all go? Wait. So how far you see this all go? Can you restructure that question? How far do I want to take this? I don't know, man. It's just like let's also look at this from the industry POV as well. The industry, let's just be upfront. Industry, shit. It's a shit industry. The people are just super negative. Everybody wants beef, right? It's not something I want to associate with. Like if anything, in the longer term, I don't want to do online business. I want to do real in-person business, which is kind of which I already do on the side, but it's just it's a completely different vibe comparing the FX niche to doing real business in real life with people. So in terms of how far, I don't know, man, because like this is also why I've never associated with a broker. This is why I've never associated with a prop firm, because these types of entities are directly incentivized to have you lose, you know? So the entire industry, they want you to lose. People that like, for example, of course I'm saying this as somebody who sells a mentorship as well, but is it not directly or is the mentor not directly incentivized for you to continue to pay for the subscription? Yes or no? The answer is yes all day. You know what I mean? Unless you have like a longer term frame picture. For example, like with the fund, if I can get people to legitimately become profitable, or if people legitimately see value through the fund, which is legitimate earn while you learn, sorry, then that to me is real value, that where I'm directly incentivized to make you money. If not, then neither of us win. You know, like I always believe in the whole win-win-win situation: win for the business, win for the community, win for the public. And it's very hard to do that in this type of niche. And that's actually something from, if you guys have ever read 48 Laws of Power, like I forgot which rule exactly it was, but it talks about in one of the chapters that you always want to keep somebody below you if you want to keep essentially getting value from it. And that's just not something I want to do. It's just, it doesn't pay enough. I'm not a POS like that. So I just think that I would much rather want to move into higher leverage opportunities and propel myself into the 7-8 figure range, not necessarily just 6 and 7. Is that law one? Or am I tripping? Yeah, I've only read the book like once, but yeah, don't be better than the master. Exactly. So like for me, like I will be the first one to tell you there are traders in the group that I would consider better than me. Why? Because that is my job. That is the point of a mentor. That is it. I'm supposed to save you the time that it took me to get from where I was to where I am in a percentage of the time. You know what I mean? So if somebody becomes better than me, fuck yes, like that's the point. Can you combine trading with a full-time gig? What do you mean? What do you mean combine? How long did it take you to really be consistent? It took probably like 2-3 years, man. I'm on year 1, 2, 18, 19, 20. 22. I'm on year 6 or 7 now. Something like that. Started like in 2018, late 2018. Can you work a 9 to 5 and also trade by the side? Yes, of course. Of course. Like let's be real, like full-time trading is borderline a myth. Like let's just be real. You could have like a good year, but then that doesn't mean that the next year will be the same. It doesn't mean the next year will be better. You know what I mean? It's a consistent refinement. So it's honestly, in my opinion, this is why I've always told the members, it's just like this has to be a stepping stone, right? Whatever money you make, you can't just go, you know, buy stupid stuff with it. You gotta have a plan. You gotta use it in a way to build leverage. And if you can do that, then you know you can really just multiply your portfolio. But way easier said than done, obviously. But it beats just wasting the money, you know. How long did it take? You work a 9 to 5. Yeah, man. I mean, you could trade the same concepts, but from a swing POV, and you'll be fine. Like rather than focusing on anything below H1, you could just do H4, H1 and daily, and you can really just figure out longer term positions. Maybe not with AU, EU, but there's always more pairs, because if you're swinging, then I would directly recommend you um, to actually have more pairs, not just one or two, which I talk about in the book as well, but that's another topic for another day. How much is the book? $100. But yeah, any more questions? Any more questions, concerns? Cool. Any more questions, charts, anything, guys? um, Best is an opinion. I wouldn't say best. No, I would say it just depends, man. They're like, look, don't let that be a belief. Like, you should only focus on one or two pairs. Don't. That's a belief statement. You shouldn't let that actually withhold you. It's way deeper than that. I focus on one, two, three pairs because I'm a scalper. But if I was like a swing trader, like full time swing trader, then I would 100% have like 10 pairs. Because maybe, for example, if I'm holding a swing trade, that could take anywhere from a day to 2 weeks to hit my take profit. So I have to be willing to wait the same amount of time that the trade takes to then wait for another opportunity to present itself. So if I only have two pairs and I'm a swing trader, then I could go 2-3 weeks without a scenario, you know what I mean? Which isn't bad, but it's just inefficient. So if you're a scalper, you should lower the amount of pairs that you have. But if you're a swinger, you should up the amount of pairs that you have. No, honestly, no. I just made it work, man. Like, look, like there is no, like I said before, there is no secret. You make time for what you want to make time for, and if there's something that you do or don't want to do, then do or don't do it. Like in school, I will say I borderline didn't care for school. I was in there just to get my degree and then get out because I knew I wasn't going to use it, because I'll be damned if I have to go back to uh being like, a financial investor's fucking assistant making 20-30K a year. Like I could never go back to something like that. But I have the degree just because you never know. One, I was already halfway through my degree once I finally started seeing success, and I just said, you know what, I'm gonna stick through it. My parents helped me out with my first year of college, so I just said I can't throw that investment to waste. My state of mind was awful when I was going through tough times, bro. That's why I was in tough times. You change your state of mind, and tough times become better times, even if you aren't seeing the financial side of it. It really just depends on what picture you're looking at. Are you looking at the 5-10 month picture? You're looking at the 5-10 year picture. That's a concept, in my opinion, is very hard to grasp. It took me a very long time, because when I was like 20, 21 years old, it's just like 5 years is like a quarter of my life. Like, how can I, like, so much has happened in that amount of time. How can I think in that type of frame? So it can only, that means that I can only really focus on that type of frame as I get older. So now that I understand, more of that side, then I understand that the high leverage opportunities that are taken over a long period of time will generate the best results, or at least the most probable results. Interesting outlook you made. Let's see. Oh yes, I remember this. Yeah. This is cool. Let's see. Make sure read this. Life is supposedly gets at your worst. You find something that gives you purpose. Everything you call. Yes, I read through this. You guys can go ahead and read through this. You can just throw it again in the chat if you want, just so people can go and read this. But I like the idea, but don't take it too literal, because in reality, life is not like this. You know what I mean? Life is really. This is what life is like, man. At least in the short term. But eventually, if you stick to it, then slow, gradual curve over time. Because you never know. Like, for example, circumstances change, things happen, life happens, man. So it always seems as if you're fighting with time. Why? Why are you fighting with time, though? Like, once you understand the bigger picture, it's just like, look, time is a constant. Time, you cannot control time. Just like trend, you cannot fight trend. It is what it is. You just follow it. You play with what you're given. This is why his move. I'm actually doing the same thing, involving logic. Yeah, you want to do that across the board, though, not just necessarily Wyckoff or trading logic to real life logic. You just want to apply logic everywhere. As long as you keep going, hey, yeah, but you also can't go with what's the word? Delusional optimism. You have to find a stopping point. If something is not working, maybe it'll never work, then you have to find a stopping point for yourself. Maybe it's a year, maybe it's 3 years, maybe it's 5. But you have to find a stopping point as well, to where, hey, like, it gets to a point where you are wasting your time, because it is 10% success rate for a reason. And let me tell you, like, out of those 10%, that doesn't mean you're profitable. That just means you're breaking even. Yeah, so you just focus on what you can control. That's it. Keep moving. You do or you don't, man. There is no right answer. Like I don't mean to be a pessimist or anything, but you have to be realistic with yourself, Like, some people are legitimately incapable of becoming profitable traders, sorry, whether it be because of the information that you're given, whether it could be because of your IQ, whether it could just not be your thing. Like I don't want to be the guy that tells you to just completely stick to it. No, have like a plan, man. Like, if this fails, what will you do? What, you're just gonna let your life go to trash? No, man. Like, but at the same time, like, pressure makes diamonds, So there is, it really just depends on your outlook and just how realistic you are with yourself. Bitch, not saying, but how do you really know if you're not being tested or should stop? Religious point. Exactly. That's a you thing. Sure. It sounds good on paper, but what are the odds? You should treat trading as a primary source of income for other investments around. Yeah, that sounds amazing, man. That sounds incredible. On paper, that sounds amazing. But what are the odds? Because people get very caught up in possibilities, not probabilities. So what are your odds? What are the odds of you making it to that point? Can you give me a number? Have you thought about a number? How do you calculate the number? You know what I mean? But then if you focus on it being the main thing, could that affect your state? Yeah, 100% it can. Because like I said, the only reason why there is no framework to becoming a profitable trader, like one exact way to get there, is because there's too much that's like out of our control. We're given a price, we're given a time, and we're given the opportunity to enter or exit. But other than that, you like anything can happen. Yup. And now if you're forcing trades to wanting to pay the bills, then what happens when there's no scenarios around? What happens when random distribution hits and you start taking losses and losses and losses? Like, how will you react? How will you rebound? Can you rebound? You know, there's just so many aspects that, like, this is why I don't want to give people like false optimism that, hey, you should become a full-time trader. Hey, you should do this or that. No, like, come on, man. Like, quit the shit. Like, let's be for real. Like, how do you plan to break into the fund space? Alex is the guy. Alex is the guy. He can answer that for you.
Yeah, so we've been running for about, I want to say, about, well, I've been in the fund space for about 2 years, and yeah, it's not easy, especially because like the barrier to entry, say, compared to a mentorship is like very, very different. It's much harder to kind of start up, open a fund, find actual people that are willing to, you know, trust you with their money, basically. We don't directly handle the funds as we're not allowed to, but it's definitely in the process, you know, looking at regulations and stuff like that. It's all these small intricacies that you need to be aware of, and then the costs that come with these intricacies as well. But it's definitely a much more long-term thing than mentorship or, you know, teaching, because like Fredo was saying earlier, you know, trading isn't like the thing you can live off for the rest of your life. You kind of need something else, and I think a fund is a lot more sustainable, and it's also a lot more fulfilling as well, because you're helping out a lot of people that, you know, trust you. And yeah, I mean, that's pretty much it. Our kind of plan right now is just expansion in the client space, in the global footprint side of things. It's a big process. It's very hard work, and sometimes it's ultra stressful, but I think the rewards are definitely worth it in comparison to just, say, a standard online business like e-com or trading.
Yeah, man. Like, for example, the fund is all around CFDs now. Like, that is not the goal. The goal is to really break into real estate space, private equity space, and have the
Yeah,
ability to like hire people that are already doing that. You know,
exactly.
because like, for example, you in a business, you realistically, especially if you're the owner slash founder, you really want to be hands off of everything. You want to be essentially the dumbest person in that fucking room.
Hmm.
You want to have people that are specified for sales, product, marketing, etc. And you're kind of just a shot caller that's organizing and making sure everything is in place. Cool. Next questions. If not, we can wrap this up.
I'll send in the fund deck that we have, so you can read up a bit about what we do and stuff if you're interested, or if you know anyone that's interested.
Yeah, and either way, I'll post this recording to YouTube probably later today.
Yeah, nice. It has been literally 2 hours.
Yeah, about 2 hours. But yeah, any more questions, guys? Hey, man, all we can do is try. All we can do is try. Yeah, man. Hopefully we can do these more often. Just try to get a little bit more attention into what we're doing. But either way, I'm not planning on making this a super big thing. Like, if you know, and if you don't, oh well. But yeah, I'll go ahead and post this on YouTube later on. I appreciate you guys hopping on.
Space, that is where I'm heading. There's so much potential in there. Just need to have a right approach, guys. Yeah, for sure, man. If you need any guidance, I mean, Amani's just joined, right, Fredo? Am I right in saying that?
Sorry?
Is Amani just joined the group? Is it Amani? Are you a member?
Wait,
Or are you
wait.
part of the free group?
Oh yeah. He's a part of the group. Yeah. Mhm.
Yeah. So you got a long process and journey ahead, but it's definitely worth it, man. Just keep your vision in mind. Begin with the end in mind.
It'll cost some money too, I'll tell you that.
Yeah.
But cool, guys. Have a great rest of your weekend. We'll try to do these more often.
Mhm.
But yeah, other than that, the book will be released soon. Hopefully by the next call, the book will be released. But yeah, other than that, I hope everybody has a great weekend. Thank you guys for hopping on, and I'll see you guys in the next one.
Have a good one, guys. Speak soon.